What's going on, everybody, and welcome back to Exploring Investments with Justin. And in today's video, what I'll be covering is if the stock market is starting to become overvalued and will there be a crash, in the next couple weeks, maybe couple months as things develop in terms of economic data. So I do want to talk about that. And then also, am I buying stocks right now? Because the market is pretty high, so I do want to kind of give my input on whether or not I think right now is a good time to be investing money, or maybe holding on to that money and building your cash levels and waiting to see if that market drops. So those are the two things that I'll be covering in today's video. And before we dive right into today's video, I do want to just say thank you to all of you that have been watching and supporting the new YouTube channel. I do appreciate all the comments and new subscribers, so I appreciate you guys, and I just want to say thank you. And with that being said, let's jump right into it. And right off the bat, I am going to answer the question of, do I think the market is overvalued? And that is yes. I do think the market has gone up way too high given all the economic data that's come out, from unemployment to earnings losses. I mean, we're seeing record number of unemployment, and yet the market is going up, which doesn't make sense to me. So that's some of the things that I wanted to cover in this video, was some of the reasons why I think the market is overvalued. And I'm going to answer at the end of the video whether or not I personally am buying more stocks. So if we look at the Nasdaq Composite, we'll see that over the last year, it's actually up 15%, and year to date, it's up 0.5%, which is just crazy considering all the negative news that has come out over the past couple weeks with record unemployment and declines in both GDP and company earnings. So I just don't understand how the Nasdaq is up 15% from a year ago today, when back then there was no global issue and company earnings were actually trending upwards. So this just blows my mind that it's not only up year to date, but also up 15% over the last 52 weeks. Now, at least the S&P is still down 11% year to date, but somehow it's managed to basically break even from where it was a year ago, which again is mind-boggling to me. And even the Dow is much higher than where it should be given the circumstances around company earnings and unemployment. I mean, come on, it's really only down 8% from last year and down 17% year to date. And if we look at how the price of the S&P has risen compared to the EPS for the companies in the S&P, we'll find something pretty crazy. I mean, how is it that the S&P is rising while the forward earnings per share is declining? I just don't get it. I mean, common sense would tell you that if earnings are declining, so would the stocks. But then again, this definitely isn't a normal stock market we're going through. Now with forward EPS declining, this pushes the PE ratio even higher, which isn't a good thing. And analysts are expecting a 40% decline in second quarter earnings, along with declines of 23% in Q3 and another 11% in Q4, with growth not coming back until Q1 of 2021. And that's if we can get through this global issue by then. Now, given these forward estimates, the S&P now has a forward PE of 20.4, which is actually 55% higher than just 2 months ago in March. This just goes to show how much the valuations of companies have been rising, even with massive hits to earnings and revenues. And this is just one of the signs that I'm seeing that makes me think we're due for a pullback in the market. Now, the next red flag I see in the market is the fact that it's been rising as we see a record number of unemployment claims being filed. Now, the chart you're seeing is showing the number of unemployment claims filed each month over the last 20 years. Now, before I dive into the numbers that have been coming through over the past 2 months, I first want to put this into perspective by looking at the historical data on unemployment claims so you can see just how bad of a situation we're in right now. So starting with the dot-com bubble in the early 2000s, we saw that from 2001 to 2003, unemployment rose from about 4 million to roughly 6.5, 7 million. And it took just about 4 years to get this back down to 4 million. Then soon after, we ended up going through the financial crisis in 2008. And this saw unemployment rise from 4 million again to 10 million now. It then took over 10 years for this number to get back down to 4 million. So trust me when I say the unemployment numbers we're seeing are not going to go away anytime soon. The reason I'm telling you how long it takes to get back to normal is because right now we're seeing an unprecedented number of unemployment claims. As you can see from this, there were 3 million claims filed in just the past week alone. And the total number of claims over the last 8 weeks is a staggering 36.5 million. which again is an unprecedented number of people who have lost their jobs in such a short time. And this is why I don't understand how the Nasdaq is up year to date. Now again, the reason I brought up how long it took for unemployment to go back down after the past 2 recessions is because it's going to be years before we see this number come back down to the 3 or 4 million that it was before we went into this global issue. You know, people who don't have a job right now are not going to be spending their money on new cars or expensive dinners at their favorite restaurants. They're going to be holding on to all that cash to pay for things like their mortgage or their car bill or any bills that they have, because a lot of people don't have a job right now. And this is another factor on why I think the market is overdue for another crash, just given how awful the unemployment data is. Then we have the issue of hyperinflation, which is basically inflation on steroids. And for those of you that don't really understand what inflation is, it's basically just when money loses its value over time and the price of goods increase because of this. Now, typically we'll experience inflation of about 2% every year. However, there are fears on Wall Street that we could see hyperinflation due to the amount of money being pushed into the economy. Now, the government has already pumped more than $2 trillion into the economy through the CARES Act, which, don't get me wrong, I fully support and feel was much needed for the millions of Americans who lost their jobs and all the small businesses that needed access to loans to keep their doors open. But now the government is working to push through the HEROES Act, which actually was just passed by the House of Representatives on Friday and would be adding another $3 trillion into the economy. And again, I do understand why we're passing all these stimulus bills, because right now a lot of people don't have a job and they need those stimulus checks to survive. Meanwhile, there's a lot of businesses at the same time that have had to close their doors completely and need loans to keep the business open. But if we look at how the price of groceries have changed over the past couple months, we'll see that we're already kind of starting to see inflation in some industries. And in the month of April, consumers paid about 2.5% more for groceries than they did in March, which, really doesn't sound like a lot when you think of just 2.5%, but this is actually the largest 1-month jump since 1974. Now, I don't want to freak anybody out about hyperinflation, because there is a little bit of hope that we won't see this, because back in 2008, there actually wasn't hyperinflation, even though money was being pumped into the economy. And the reason why we might not see it now is because of actually the record number of unemployment claims being filed. So a lot of Americans who don't have a job, they don't want to spend $10 on a meal like they would have before. So a lot of businesses might slash their prices to incentivize people spending the money and going to their business. So this could offset the decrease in the value of the dollar that we would see with hyperinflation. And so between the stock market and how much it's risen and the valuation in terms of PE that the stock market has gained since the March 23rd lows, combined with unemployment and the chance of inflation, I'm not really looking to buy any stocks right now. And that's pretty much the answer to the second question of, will I be buying stocks? So right now I'm definitely going cash heavy. And the reason for that is just because I don't want to be putting my money in the market when I truly do believe that it will be dropping. It might not be next week, it might not be in 2 weeks, but I do feel that the market needs to fall more before it can keep going up. And as I wait to see the market come down a little more, there are a lot of stocks that I'll be keeping my eye on, because I do have a lot of companies that I feel in the next 5-10 years will be a lot bigger than they are now. And if you want to see which 3 stocks I'm watching for the month of May, I'll go ahead and link that video up top over here, and you can go check it out if you're interested. So with that being said, I do want to say thank you to everybody that's been watching the new channel and subscribing. And if you have any feedback or want to let me know what your thoughts are on the market, be sure to let me know in the comment section. And if you thought you got some value from this video, be sure to hit the thumbs up button, as it really does help support the new YouTube channel. So again, I just want to say thank you guys, and I will catch you on the next one.